Hey, Keegan, is Ashley out there? I just wanted to, if there's anybody still getting coffee or something.
Yeah, I have it. It's in all our minutes.
That's weird. Good to go.
Thank you for being here.
Thank you for being here.
Thank you for being here, exactly. All right, I think we're going to get this party started. Thank you all for coming. This panel is going to be about financing for independent films. We have an illustrious C-suite of executives up here to give you their words of wisdom. And I'm going to introduce one at a time, and they're going to tell us a bit about what they do, what company they work for, and how they got there. And then we'll launch into some questions about the myriad of ways independents can finance their movies outside the studio system. First up, CEO of Liquid Media Group, Ron Thomson.
Hello, welcome to everybody, and nice to have you here. This is so exciting. We're talking about stuff which is near and dear to my heart that I'm very passionate about. And I am pleased that we've assembled a integrated solution to help independent filmmakers. The reason that we got to this point was a significant pain point that I have been addressing in my own business over the past 22 years at my firm, Cameron Thompson Group, when I was made aware of Liquid, and that Liquid actually had a, if you like, a sort of a infrastructure that from a public company standpoint could be utilized to be a platform for building and financing a new sort of iteration, what we call a recalibration of our business. And but really where it sort of began was with the pain point of filmmakers, producers, studios, and many majors and distributors coming to me regularly over the period of the last, say, 2 decades, with the constant issue of they're 90% financed, or they're 80% financed, or they're 70% financed. They're almost there. We really don't need you, Ron, but we really want to talk, and maybe you can help us, finish this thing. And it's all done. We're greenlit. We're going ahead. And that would be the case for 3 years. And some of the most famous filmmakers in the world and television executives with major series are constantly faced with this issue that they're 90% of the way there, but they're actually not there at all. And so as a result, time passes, which is your biggest enemy. Cast falls apart or fragments or moves on, and you've had to have put up a holding fee, or it's done on a pay or play basis where, the producers are under an enormous amount of stress financially and execution risk and their own personal kind of, equity they've invested in these projects, only to have them not come to fruition. Most of the time, as we all know, they don't come to fruition. The reality is, most of the time, that period is indefinite. And so many or most of the projects, as my experience, don't get done. And so, I have over the years been parachuted into these situations when I see that there's a way that we can fix things and that people are open-minded and that we can be creative and find a business-like solution to fill the gap, or the super gap, or the super duper gap sometimes, usually, and maybe reformulate the project, be it a film or a series or other. But I'm usually referred to as the fixer. And so I think that is what the opportunity is for Liquid Media Group, is that we have decided to structure more of an industrial offering, kind of like fixers, to help at scale independents operate, do what they do best, but utilize our fixer-like infrastructure for financing that is to some degree formulaic, because it has to be for us to be able to instill confidence in our financial backers, whether that's people who we currently work with now who want to participate and gain higher yield with their capital, or ourselves as we raise, because we are now raising our own financing facility to be able, as a mechanism, to do that financing through our own means, once again, to increase the rate of return of our existing investors and new investors. So that's really the pain point that we're responding to, and that's what our solution is to provide this financial vehicle that will be timely and sustainable and help people in completing their financing plans so that they can get into production. Now, obviously, you will have heard over the last couple of days that ours is not we're not a one-trick pony. We have an entire solution, and in order to be able to be eligible for that funding, we have a fairly rigorous process, which is, I believe, necessary, and it helps us all better do our homework and understand the nature of a project, whether it's from a script perspective, whether it's from a talent perspective, whether it's from a distribution and a financing perspective. We look at it holistically, and it helps us get more comfortable. It helps our investors get more confident to assure that as and when we provide that, if you like, finishing last mile financing into a project, that they're going to be able to see a positive return on their investment. So we do look at it as a business, but please understand, we are coming from the mindset of the independents, and our job is very much a can-do mentality. How can we make this happen? We want to make these things happen. We want to try to help. And so I think we have a very flexible solution, which is, I think it's bang on. So I think I've said enough about me. We'll obviously get more into the detail, but I'd throw it to Scilla.
What's the question again?
Yeah, well, no, we want to hear
Introduce-
Scilla as the founder and CEO of INDIEFLIX. We want to hear a little bit about the company and how you got there, and then we'll
we're
jump
talking
into the financing
financing.
questions in a minute.
So I'm Scilla Andreen. I'm the CEO and co-founder of INDIEFLIX, a global streaming and screening service of content for a purpose. We used to be like your source for independent film and grew the company in that way. And then I pivoted a couple of years ago. I really wanted to curate the content and focus on content that was meaningful and could build community and make a positive change in the world, or at least inspire positive change in the world. As far as financing, now that we are part of a bigger family, we'll be able to help filmmakers with financing, and it will really be, project dependent. We have a pipeline of distribution that is meaningful, that does bring a return, and it does. Only certain content will fit into that particular pipeline, but we are developing other reaching out to other verticals and creating pipelines to serve those verticals as well, whether it's military, schools, corporations, houses of worship. We have a new license that we just launched for a trilogy of documentaries that address mental health, and we've just launched a therapist license. And so that's kind of exciting, which just has a whole, package that goes with it. It's a long runway, so there's opportunity to continue to make money on your content. That's something I'm a big fan of. We work so hard on our films. I don't think we should just give it one blockbuster weekend with a wing and a prayer. I think there's a lot of opportunity. I love playing with windows. I love making multiple products out of one product. And I love getting feedback and data to be able to evolve those products into more products that are even outside of film. Just like Hollywood makes Star Wars, and then you can go get the Happy Meal merch, like we can do the same. So, and I've had my own experiences as a filmmaker. I'm probably the opposite of Ron, the other end of the spectrum, where I get super scrappy and resourceful and, fly on your miles, sleep on an airbed, use your credit card, beg, borrow, and steal. I've worked, but that was sort of the early days, and then kind of like evolved into working with brands, working with foundations, and then raising money as donations and as also as investment. So, and then learned how to raise money to grow INDIEFLIX. So I kind of have a little war chest of ways to raise money.
We're going to dig into all of those ways. All right. So, founder and CEO of Filmocracy, Paul Jun.
Co-founder of Filmocracy.
Co-founder? Oh, you have to
Um,
share?
Yeah, so we have a big co-founding team. I'm just a piece. But my background is in independent foreign sales. Used to do pre-sales for raising money for these $10 to $50 million independent films that we don't really see anymore today, that were largely financed through pre-selling the rights to movies that weren't made yet to different countries across the world. It was in that experience that I learned more about the industry and decided that I wanted to focus more on what I call the true independents, like the sub $1 million budget films, the people who don't have a rich uncle or a rich neighbor that they can ask to help finance their dream project. You know, it's really difficult to break into the industry, and those types of people need a lot of help. They have big dreams, but not a lot of support. So Filmocracy ultimately is a film and festival streaming platform. We stream films, but we also stream film festivals. And what we hope to do in the future with regards to financing is, you know, allowing people to invest with their own money and gain equity in independent films without having to be, you know, an accredited investor. And what a lot of platforms out there do that, for example, like Movie Chain or other companies that have this equity financing piece, they're just coming out and saying, give us your money, we're going to make 5 films and maybe you'll get some back. And there's no trust there. And so what we're doing first is we're building the audience first, we're building our user base first, and then we will introduce this feature to them so they can take the rewards that they've earned on Filmocracy and invest them directly into new film projects. And then we complete the circle of life.
Awesome. I'm Jon Fitzgerald from iGEMS, which stands for Internet Guide to Engaging Movies and Series. Our goal is to save you time as you search for content. With iGEMS, we combine human curation with word of mouth through sharing, and then machine learning, tracking social interactions and your preferences to ultimately help you find the best content. iGEMS TV focuses on guiding audiences to the best content, while iGEMS Pro is more of the filmmaker solution piece, where we aggregate all the best content that we think could be helpful for filmmakers, focusing a bit more on exhibition film festivals. So after the film is done, what are you going to do with it? Helping with sales, and ultimately just tracking what's happening on the festival circuit and in the acquisition space. So we're excited to be joining this family up here. And as you can see, it's a pretty diverse group of companies. But what I thought I would start with is there are literally dozens of ways to finance independent films, but we are focusing on kind of the lower independent versions. And I think one of the most interesting spaces now is in fact the equity-based crowdfunding. So Paul, I'm going to throw it back to you if you wouldn't mind talking a little bit more about that, because there are, excuse me, there are about half a dozen that I know of that are doing that. And for those of you who don't know about this process, just in general, the idea is that Kickstarter and Indiegogo's, you know, you could do this crowdfunding thing, and they've helped raise tons of money for independent films. It's been great. But in the last couple of years, we've seen a bit of a shift to equity-based crowdfunding, where you can actually get something more than a hat and a digital screening copy. So Paul, maybe talk us a little bit through the equity funding model, if you wouldn't mind.
Yeah, so Kickstarter, Indiegogo, Seed, and Spark have been helping people raise money for their films for a long time, but there's really a cap. There's a ceiling on how much you're able to raise on Goodwill. And once people reach that cap, then they make their film, and it's typically going to max out at like $200,000, $300,000 budget, which these days you can do a lot with, but it's not really ever going to reach that theatrical level with that amount of budget. So how do you get to the next level? How do you make something that's like a real, maybe like a $2 million to $5 million budget? I think the only way to do that is to either find outside investors or do something like equity crowdfunding. And as John mentioned, the other platforms out there, there's many that are just coming in using Regulation CF or these new different laws that allow you to do crowdfunding without having accreditation. And you don't have any recognition. So there's no trust. Like, I'm not going to give my money to a random company that says they're going to make 5 movies. So, they don't have the audience to support it. And so that's why we're going the opposite route. We want to get a lot of people on our platform who are using it to watch movies, getting rewarded for watching movies, which is part of what Filmocracy does. And then they can take those rewards. We call our reward virtual popcorn. So as you watch and rate movies, you earn virtual popcorn, which is exchangeable for prizes, gift cards, movie tickets, festival passes. So why not later make it so that you can use that popcorn to invest in a movie? So you're watching movies, earning popcorn, investing in movies, eventually financing and producing movies. And this is very exciting because now you have a piece and you're more committed and it has some story behind it. So coming in as an equity, investor in a random film, I don't think works. But if you can create a community around those films, that's what makes it valuable.
Yeah, and I think one of the things we talked a lot about yesterday is the idea that if you're basing the investments on an understanding that you have audiences and you've been tracking the data and the preferences, you're kind of giving audiences what they want, and so you're, to Ron's point earlier, you're giving some confidence to your investors, right? Which is really important. Before we go back to Ron on kind of the bigger picture, I wondered if Scilla can tell us some of her stories about raising the funds. I know you've done a lot with product placement and sponsors and very, very creative ways other than just a standard investment.
Yeah. By the way, that's so cool. I love that. What you guys are doing. So smart. So there was a film that came to me that needed finishing funds. And they'd made their movie for very little money, probably less than $50,000 or maybe even less than that. And we ended up doing, just to make it short, was I went to Mattel. They gave us $100,000. And basically, we got to finish the film properly. But we also gave them a little scene from the film as like an animation that could go up on YouTube for free. And the leads in the film and this was a documentary, we're going to be like what they were called brats. They were these dolls that also had a show. And so that was the trade-off, is that we would let them take one of the scenes from the film and turn the stars into it. A Bratz show, an episode. And so that was one way, which was really nice. And then Mattel was actually out promoting it. And then that little Bratz episode was a little bit of marketing for us to raise awareness for the film, and that helped tie in through other means. So that, that's one way of doing it. We've had brands step in to help fund a film. Microsoft has helped support films around women empowerment. So, if you do your homework and you target corporations or organizations that support the mission of your film, it's really easy to go to them and ask for their support. I had a friend who made a movie about biking across the country. His list was enormous, and it was from helmets to shoes to bikes to gear to the maps to the different organizations and biking organizations. And between that, reaching out to all of them, he raised a couple $100,000 in money and in goods, and then had a built-in audience. And then when it was time to release the film, he had all of those organizations to help to promote the film. The pipeline. There you go. So there's lots of ways to do it. There's the crowdfunding, the Kickstarter. I've definitely done one of those just because I wanted to see what it was like, and now I know, and I'll probably never do it again. It was tough. It was a full-time job, and I got tired of asking everyone for things.
Yeah.
And then you're sending out T-shirts and you're sending out stuff, and you're like,
the deliverables
shipping was so expensive, and and then that was my job, like that. I've also done fundraisers where I've traveled around the country and had very generous people offer their beautiful homes and caterers. And we put together a reel and we did our little song and dance routine and raised $500. And, so that was disappointing because people were like, you're going to make a movie about mental health and take it into schools. Who's going to want to watch that? I don't think that's going to fly. So it was a hard sell. I did get lucky and went to I did a fundraiser in Sun Valley, Idaho, and raised $10,000 in 2 hours, which was nice. But then word got out that I wasn't raising money. And so I had people who actually had firsthand experience with their struggles with mental health and called me up and said, I'm going to give you some significant money and I want you to go out and make this movie. And if you need more, let me know. So, it's about hitting the pavement. It's about being consistent with your messaging, having all of the materials, having done your homework, having a little bit of a reel to show. There are so many ways to raise money. And like Ron, all that you do, and, I've learned so much from you. You're kind of more the gap, the fixer, but the bigger money, the tax credits, and the more official route. I'm more like where you can get started and get some momentum and get going. And I'll just say, as much as it is really nice to make those $3 to $5 million movies, which I could make a lot of movies for that money. I've learned technology allows us to make incredible movies for very little money. So keep your budgets low and don't load it up so much in the front. I know we all want to pay our crew, and I do. So make your crew a little smaller. I will help lift and lug equipment. Granted, it's not a union show, but if you don't have such a huge budget, you don't have as much to raise and you don't have as much to recoup to get in the black.
Right. I want to shift to Ron to talk a little bit about their version and their solution and the formulas that you were talking about. But if you wouldn't mind, one of the things that kind of gets left out of these conversations often is the idea that we need to be more filmmaker friendly and we need to have better revenue shares, and filmmakers typically end up with the short end of the stick. And if you're going to go and raise all this money and you're going to make this movie, you want a chance to not only pay your investors back, but you want a piece of the movie too as a filmmaker. So I'm curious to hear more about the liquid model and thinking through, like, where do the filmmakers stand besides just getting their movies financed? How does that revenue share look for them?
That was really interesting to hear Scilla talk about her experience, and I think it's a really relevant experience in that my job, our job, I think, as a company now going forward with our newfound business model, a recalibrated business strategy, as we call it, is one where we want to see that the people that come to us are trying their hardest to go off and put together the resources, irrespective of whether they're the right people at the time. We're here to help them get it done. But if we see that they're leaving money on the table, that they haven't pursued, all of their soft money opportunities, whether they're tax credits or rebates or subsidies or product placement or advertising, sponsorship, what have you, it's very important for us as a company, for filmmakers who want our help, we're there. But we just want to make sure that you're looking at this, you've really done an exhaustive sort of study of what's available to you. And so every time when someone brings a financing plan to me and says, here we need $4.5 million and we're looking for it as equity to make this movie and we want it fully financed, my first question is, well, show me your financing plan. And if they say to me, well, that's it, it's a harder discussion. Mm-hmm. It's not a no, but it's like, look, where are you going to make this? How are you going to make this? Have you thought about the fact that this film could be made in, I don't know, Timbuktu, where the tax credits are 22.3% or whatever the hell they are? And so that is something that we'd like to see, that they actually have done their homework, that they've looked at all the available capital that they can put together, whether it's soft money or it's as a building block, or it's pre-sales, or it's, other forms of capital that they can bring, or they can think about bringing to the party. And I think that is important as a sort of a discipline, because at the end of the day, I think our methodology it's always been historic up until now, has been to take stock of what they have, understand if they really maximize those sources of capital, and then what's left over, and then how can we, if you like, evaluate that risk, understand what additional security there may be, what additional revenue is being not talked about that may exist, whether it's as a US deal, or whether it's a digital deal, or whether it's a ancillary or merchandising opportunity. We're going to look at all the various forms of, if you like, financial security, revenue opportunity that might exist for this particular film. And so whether it's a $1 million movie or it's a $20 million movie, to us, it's pretty much the same in terms of what our opening position is that we want to make sure that the filmmakers are aware of the fact that you never want to go off and just simply say, here's how much money we think it's going to cost to make the movie. Let's go, and here's what we're looking for. Please trust us. We know, and we'll look after the selling and the exploitation of that after we're done. That is something that we're quite uncomfortable doing. We want to make sure that they've done their work, ahead of the game. And so, I think and I might have mentioned it the other day in the other panel I was in, was if you ever saw the movie Get Shorty, and the whole concept of using other people's money and making sure that in advance of getting involved, that the filmmakers have actually done some thinking and scratched down on a piece of paper what they believe those sort of pillars of their financing plan could be. Having said all that, we want to be flexible, and we are students of our industry, and we want to embrace other business models. We want to try to help the filmmakers so that they're not at risk, and so that they can participate in the long-term capital appreciation and recoupment and upside of their film or television series. So that is something that we really care about. It's being collegial and trying to put them first, while at the same time putting our capital partners first, because ensuring that they get their money returned to them with a fair appreciation on that is something which is important for us to be able to do it over and over and over again, and to have backers who understand that, hey, this is just not a one-off game. This company, Liquid Media, has done some financial engineering. It's created a way, an infrastructure, an approach, which actually acts more like an asset class. And there's an enormous amount of capital in the market, and I've had conversations with a few of you and other people over the last 24 hours about this. But there's an enormous amount of capital in the global marketplace right now that's looking for a home, much of which would love to be involved in entertainment. But unfortunately, it's always looked at as more of a discretionary thing, and these are affairs of the heart, where passion, in many cases, takes more priority over business logic and financial acumen. And so that is a constant issue that we have to struggle with. And we've been involved in raising structured funding and fund mechanisms all over the world for the past at least 10 years or 12 years. And it's been an uphill battle, I must say, because the feeling is that, oh gosh, in Asia, we had such a hard time here several years ago where, filmmakers had a great big movie, a big sort of a tentpole type film, and they went out to individual investors who would be happy to put down $180 million and write a check for bragging rights. And yet it was an enormous gamble. And so what we said was, look, we have a way of causing you to have a more or a less risky investment opportunity, where you can distribute your risk across a multitude of projects. And we have an investment thesis which is going to protect your returns. And we're not acting as tastemakers, but we're doing things in a business-like fashion to ensure that you get an opportunity to participate in this asset class, to work on some exciting projects, to really, add value in the way that it can be most beneficial to the filmmakers, and you're able to spread your returns and really juice your returns over a body of work. It was a hard sell. at that time. Eventually it got done. But I think the idea is once it got done, people came back to us and said, hey, look, gosh, we'd like to double down. Could we put 50 million in? Could we put 250 million behind this using your same investment thesis? Because that way we get to not just that we get a taste, but we get a more normalized return across this category. And we don't need the money back right away. We're prepared to let it ride for 4 or 5 or 6 years or whatever it is. And it's almost like a venture capital fund where we're happy to basically use this sort of mutual fund-like approach where we know not all the projects are necessarily going to be hit it out of the park, but we can, be part of this. We can put our funds to work. We can have, a sort of a higher yield on the money that we're investing, and we can feel good about it. And so I do think, our approach is very much about helping our own investors gain those kinds of returns and have that exposure to entertainment, also to things that are near and dear to their heart, social impact, topics, which are so important and so provocative in our world today. Art house films, things that have a real meaning, drama, scripted drama, things which are exciting and are responding to, this huge, demand for fresh content from the streamers. So we want to be in all those places. I think our methodology is to act in a business-like fashion, to use a structured approach to how we look at each one of these opportunities that come to us, to be open to, we're open to equity. We've looked, I worked with Cantor Fitzgerald and Cantor Index and the Hollywood Stock Exchange and all the great sort of trailblazing work they did back in about 2006, 7, 8, 9, 10, 11, 12 in trying to create an equity-like exchange for investing in movies at scale. It was so interesting. I'm a huge believer in that, and that's something that we'd love to be behind. We are absolutely trying to be leaders on behalf of the people that come to us, so that it's not just a one-size-fits-all strategy, or that we're open to other things. But by the same token, because we are running a business, we have to protect the interests of our investors. We need to be cautious. We're using big data, for example, and one of our cornerstones to our sort of entire solution is that we want to ensure that it's not just ad hoc decision makers and tastemakers who are deciding what gets greenlit and what doesn't. We're looking at, can we add some science to this? Can we look at statistics? Can we look at big data? Can we look at analytics to understand, has the script been broken down? How? In which way? Who broke it down? How was that done? What kind of empirical data did that create? Do we have any trends here? Can we understand that there are some things that are more positive than others about the script? Maybe there's something here that could be problematic and give us difficulty in being able to actually get a following from a distribution or from an audience. So, and then let's look at the talent. What's the composition of the talent? Can we workshop, making some changes and swapping around the talent to perhaps, look at other ways, first of all, from what's the ultimate end look like in terms of a creative product, but also what does that do to our values? What does that do to the cost of producing? Is this a $2 million movie or is it a $20 million movie? Maybe it's better for us to spend $20 million in this movie, or maybe we make the same movie for $11 million. But unless we've done our homework, how are we supposed to know? And if I'm the person who's in charge of a funding mechanism who's going to participate in this, I want to know that people have done their homework, and that gives us additional confidence to back the project. So we will look at analytics. We will look at, how much money are they spending in P&A? How's that money being spent? What is the distribution pattern? Where are the emphasis territories? What's our target demo? Why? What's the distribution plan? How's that going to work? And that liquid media, as you know, the fourth pillar of our value proposition has to do with monetization and looking at every possible optionality in monetization, not just the traditional. We're looking at over the top. We're looking at business to business, which is something that Scilla's company at iNDIEFLIX has done so well, where they've said, look, we're going to school boards, and we're going to, government and military and corporations and houses of worship. And we're looking at all the possible avenues. And by the way, in none of those conversations have I mentioned theatrical. Have I mentioned, home video? And I think that's something that we have to look at. It's 2021. The world is changing. It's evolving all the time. It is very much cyclical. It does tend to come back. The wheel is constantly turning around again in our industry and media. But having said that, I think we just have to look ahead and be smart and recognize that there are other revenue sources, there are other ways to exploit, and that we have to be aware of all those, and also understand, that data is such an important trigger in, in how we finance things, and understanding that data. It helps us, if you like, gain a level of confidence and security about backing projects. So I'm not sure if I've answered your question.
Yeah, you did. And it was amazing because the company's so forward thinking that it is taking these shifting landscapes and kind of turning them on its side, but in a forward and exciting way. I guess the one thing I didn't hear you say that I think you alluded to, but I just want to be clear for everybody, is even though there is a model and it'll be case by case in some ways, you do intend to build a filmmaker friendly studio of the future, right? Where like you don't want to fall into that trap of the old studio model where filmmakers walk away with their head down because they got forced into a deal to get the money, right? You want to help them get the movie made, but you also want to help them share in the upside potential if it's successful. Yeah. That's a new way of thinking.
Yeah, I think our methodology is very much, somebody has to try to protect this process, to protect their interests, but also to in many ways do the things that perhaps they're not set up to do, to evaluate the risk, to try to act as their business partner, to really help them go to bat with, some of the financing that they're going to have to come up with. I mean, I know even on the equity side, regularly we have projects that come to us, and they're looking for the equity slug on whatever the size of a project is. And, I always look at these people and I say, okay, I get it. I understand that. And, the filmmakers have already put a bunch of money in, and they've got, and they've got some commercial interest, and they've done a distribution agreement, or they've got a sales agent, and maybe they got some MGs or a distribution guarantee. Maybe they've got a studio deal on hold. They've got all this sort of commercial activity. It's fantastic. And then you've got some tax credits, and you got 28% of your budget covered by tax credits or a rebate or something. Fantastic. I like it. And you've got a slug of, I don't know, what, 4 or 5 million. And great. Okay. So we have an interest in participating in that project. And then the first thing they say is, so on the waterfall,
where do I fit?
All the secured lenders get paid first. The banks get paid first. And, oh, well, you wonderful people who've taken this enormous risk with your $4 million, back of the bus. That I will not do. And so my job is to try to help the project get completed and to find a way to reshuffle the cards in a way that we're comfortable, that we can work with the existing financiers who are backing certain elements of the financing plan. And you've got to be creative. We, thanks to Andy Wilson, who's our CFO, and some of the thinking that we've had up till now, have a financial engineering template that we've created. It's version number 88 or something like this, constantly tinkering with it. We use that as a base case to start with in terms of how we evaluate these projects. But at the end of the day, we are absolutely acting as a collegial source with our filmmakers, because we're trying to help them get the project done. But we're also trying to help them not to do a stinky deal. Nobody wants to do a stinky deal. I understand all of us want to get our projects made, but nobody wants to go off and sell the farm in the process, and nobody wants to get themselves in financial difficulty along the way. And these projects must recoup. Every single project that we do, we want to ensure that in advance, we've engineered how they will recoup and when, obviously with certain things all things being equal, as they say. But that is our approach. It's a very structured approach with an enormous amount of flexibility and putting the filmmaker first.
That's great. I want to shift for a minute over to Paul, because since we are talking about independent financing, and Ron's forward-thinking vision is amazing, but I also think it's important for us to just remind people that there are other ways of financing independent movies. And I know you have a lot of experience in the international pre-sales and with the markets. You got AFM, Berlin, Cannes, the people buying and selling movies. Maybe talk a little bit about how independent filmmakers have leveraged international sales to get the projects made.
Yeah, I mean, the last time I was in Toronto, I was working as a sales agent, and it was really fun being a sales agent because you're basically going to each market, meeting with your friends who are the distributors for different countries, buying them dinner on the company card, buying them drinks, having a good time, and then at the end of it, oh, by the way, I have this, Brad Pitt movie. Do you want it? And of course, they'll say yes, and the deal is done. And it used to be that easy 10 years ago, but that has really changed. A lot of it has to do with the maturation of global markets. All the other countries in the world used to rely on the US for entertainment, but not so much anymore. You have the Germans selling to the Japanese, you have the Koreans selling to the Latin Americans. So they are not completely dependent on us, and we've shifted almost entirely to studio-driven, worldwide, kind of watered-down content that appeals to every country. And the really iconic types of movies like Back to the Future, or these really kind of aggressive movies that don't get made anymore. So you can't do pre-sales in that way. And that's why you've seen a lot of the star-driven mid-budget movies have gone away. But I think what people should be thinking about now is, we are talking about different things here, but they're actually all connected. And if you're raising money for, let's say, your Kickstarter project, and you raise $100,000, it's an amazing accomplishment. And many people will take that $100,000 and they'll go make a short, thinking that if I make a short and it goes to some festivals and I win, I can make a feature. Somebody's going to make an offer to turn it into a feature. It has happened before, but it's not as often as you would think. And I would implore people to instead take that 100,000 and now leverage this into more money. It's all about risk mitigation. So if you can show people, I've raised $100,000 on Kickstarter, great. Now I'm going to do an equity crowdfunding campaign. And I can show people, look, I already raised $100,000 of free money. That's how much people like this project. And then I spin that into, a $1 million equity crowdfunding campaign. Now I have $1.1 million. Should the journey end there? No, because now you have $1.1 million. Now you can approach some independent equity financiers and say,
Ron.
look, or Ron.
You call
We're
Ron.
working our way up to Ron. We'll get there. But now I have 1.1 million. I can go like, look, I want to make a $5 million movie. I've raised 1.1 on my own. We have a following now. We have a built-in audience, like a real audience. They gave me their money. What more commitment is there than that? And so now I get some smaller equity financiers involved. Maybe it's a rich uncle or a rich neighbor. Now I have $5 million. That's enough to make a movie. But what if I want to make a $20 million budget movie? Now I call Ron. And now my conversation with Ron is going to go way better than the other filmmaker who's like, hey, Ron, I have this script. It's really good. My mom read it. So, it's really about how do you mitigate all of the risks? How do you build a creative plan and execute on that plan? Because that reflects on you, and that reflects on how well they can believe that you're going to execute your plan, because you've already done it a few times.
What if you take your let's say you raise $500,000 and you have a good concept, maybe you even have a promo reel. Can you take that to Cannes or Berlin, to the market with a sales agent to sell certain territories to raise the other funding without getting to Ron yet?
Yeah, it's possible. The foreign sales market has really gone down the toilet. You used to be able to raise and make movies for free, basically. Like the company I used to work for is called Covert Media. They did a movie called Dirty Grandpa with Robert De Niro and Zac Efron. That was a free movie. Like, we raised all of the money through foreign, and then we sold domestic for extra to Lionsgate, and that was extra money in our pocket, and we made a free movie, and now we'll get the licenses back after 20 years, and that's continued money. But now, just as a follow-up example, we tried to do Dirty Grandpa 2 a few years later, and the amount we could raise through foreign sales was much, much lower, even though Dirty Grandpa itself did 100 million, I think, at the box office globally.
Wow.
So it's just a different world now, and it's extremely star-driven because it's just impossible to put a random movie on a billboard in Tokyo when the Japanese people don't know who those people are. They know maybe only Brad Pitt and Tom Cruise.
I love listening to you talk. Can I ask a question?
Yeah, go for it.
So we're talking about feature films. And I think there's a whole other kind of content we could be making, which is limited series and series, which is people want to watch something that they can invest their time in. Once you've had the adventure and journey of figuring out what you want to watch, then I just feel like that's a whole market that we should be thinking about as independent filmmakers. Take your feature and cut it up. Can you cut it up into 4 to 6 episodes? I agree. Short films are not a calling card anymore. You're not going to get it made into a feature, rare instances. But can you speak to that at all as far as
You can also repurpose, right? Like you were saying before, you could
Multiple
take
products.
a social impact documentary to international markets with a sales agent selling off different territories, retain the IP, and then repurpose that into a 45-minute version to take out on the educational market where you get paid like you are with some of your documentaries, right? So there are so many ways to generate revenues and
or make a docuseries.
make a docuseries.
4
Yeah,
episodes
it's just
or something that you can sell to Netflix.
Yeah, but you can also use some of the means that we've discussed up here, whether it's Paul's equity model or Ron's model. You can apply all of those to series, right? I mean,
Yeah,
you can still raise some money.
100%.
There's a lot more money, and frankly, a lot of the AVOD platforms are starting to put some of their own money in because they know that they can put ads in front of these series. They can make more money with a series with all the different ads that they can place than they could with a feature doc.
Yeah.
So
Big area for us. I mean, for the serialized stuff for us is really, we're at the Toronto Film Festival. We're not at the Toronto Streaming Festival, but the streaming or the serialized market for us of whether it's a mini series or limited series, it's a core market for the company. It is. I'm a television guy. I come from the TV industry, so that's really what has always been my mainstay. And having said that, we've done so many movies that it's they enjoy many. There's a lot of similarities, but the idea that you can create so many different opportunities for people to engage, and then different seasons, and then all the different materials that Scilla creates, which are ancillary to that, are quite exciting.
So we've been yakking for quite a while up here. Wondering if there are any questions from the audience. Yes, sir.
Hi, my name is Osmond Lewis, and I'm from Genie Paper Studio. Ron, would you say Liquid Media Group is now a full stack company? And is there anything that you wish you hadn't turned down in the last year?
Well, I think we're a company it's formulating itself. I think we're very early stage company. We're getting out of the gates, out of the blocks, I guess you could say. We've got something that we now feel is comprehensive enough to be able to offer to our customers something that is meaningful to help them. We've decided to acquire companies as opposed to just simply partnering. So we've actually 4 companies that we're acquiring now, and hopefully another 1 or 2 on the heels of the first 4 that fulfill a function within that entire solution. So I think we're feeling quite confident now that we've got everything that we need to execute a complete solution. I think we're going to go places, and I think we're at the very beginning of a process.
You regretted turning in?
What's your regret? What'd you turn down that you wish you
Or
didn't?
you just no regrets?
I don't have any recent regrets. I'm very pleased that I decided to join Liquid Media because it's quite exciting, and it's an amazing company.
Come back in 5 years and ask that question. Yes, sir.
You talked about people coming to you if you're in the last place in recruitment. And I wonder if you could give us some, and of course that's not acceptable to you, but obviously you didn't completely bulk everybody else either. So I'm wondering if you could give us a little bit of insight into what sort of deals you typically end up with?
Well, I don't think that we have anything which is typical yet. I mean, we have as I said, we have an investment thesis that we are in the process of implementing. Certainly, I've done deals in the past that have been that equity-like slug, where we've had to turn the whole thing around as a big debt instrument, and we essentially have said to everybody, look, we're going to we'll fully finance the film, but what we're going to do is we want to parse out all the various forms of security, so that we're in first position, and then you, the investor, can enjoy being in pari passu, shoulder to shoulder, on a pro rata basis in first position. Why should we put you behind anybody? Why shouldn't you share in the security across the various forms of the asset? Like, why not? So that's been a very successful strategy for us. Not to say that we're, a lender, but we do utilize a lot of the same kind of disciplines that a senior lender might use. In a lot of ways, because we're working with senior lenders all the time. So we have to be constantly sensitive to their requirements, to their needs. And we also have to ensure that ours are aligned with theirs, and that we can rationalize why. We've got some great relationships, by the way, and we have lenders who want us to take on, additional portion of the risk, and are prepared to give us. They're very giving for that, right? So there's always a trade-off, a bit of a risk-reward thing. I don't know if that helps.
That does.
Yeah.
Paul, I was just wondering, when you're talking about equity crowdfunding, is there any kind of government regulations or legal stuff that inhibits that at all, or is it as seamless as like a crowdfunding regular money?
Yeah, I don't know how it is in Canada, but in the US, Barack Obama passed a few laws, one of them Regulation CF, which allows anybody to invest in projects on an equity basis if they're under a certain income threshold. Because
You don't have to have
Or
the
accreditation.
accreditation as an accredited investor now to qualify. That's the big difference. You don't have to have $1 million in the bank to be an investor. You could just, as a friend, but there is a minimum floor for most of these seed funder, crowdfunder, all these companies. Most of them set a minimum of like $100 or $1,000, whatever it is. It's not like Kickstarter where you can put in $1. There is a floor. But I didn't mean to interrupt, but I researched this last year myself, so I know a little bit too about that.
Yeah, I'd be interested to know what other countries, what their policies are.
Yeah, I know the UK is big on equity crowdfunding right now. China also has a very big market, but the US is still a very mature market. Most of the time, equity crowdfunding is used for investing in startups and companies, not so much in films. I think just because they seem like they don't have as much upside at this level, but we'll hope to change that, especially since on our platform, you'll be investing the rewards that you've earned on the platform. So it's a much easier sale.
Push a button.
Yeah, and most of those crowdfunding, equity-based crowdfunding companies will ask to include your deck and your budgets. So there's a lot more qualifications that you have to upload to actually even qualify and be on there. So it is more complicated, but it's an amazing tool. It's raised billions in the last 2 years.
I mean, as a filmmaker, and I was told I have to build a deck and I have to do all these things. It was like, I wrote the project. I'm going to make the money, make the project. But it really is important to do that part of the work, because if nothing else, it's an amazing exercise for us as filmmakers to really learn who's our audience, how are we getting there, how much is that going to cost, how long is it going to take, like really do as much mapping out as you possibly can. It's imperative. It's like you wouldn't start building a house just by putting up start hammering things together. You have to have a blueprint.
Yeah, and you have to be able, as Ron was saying before, you have to be able to forecast, right? You don't want to make a $20 million movie if it's a small niche audience that you're never going to reach that number. So that the forecasting is critical as part of that plan. Any other questions? Yeah.
For Ron, can you talk a bit more about the criteria that you're looking for in specific projects, besides the financing plan and some of the things you touched upon as far as having specific attachments, budget ranges, that kind of thing?
Well, we're looking at all kinds of projects, televisual and filmographic. We look at projects where where there is solid pre-sales, if that's a possibility, maybe an indication of interest from a streamer, the kind of indication that someone like Brian could provide that gives us a lot of confidence. That they've mapped out really and calculated what the tax credit availability is going to be. That's something which is important. In terms of size, we'll look at anything, but we're a small company, so our availability is probably in the max $3 or $4 million range at this time. That's about it.
Yeah. Okay. I think that's a wrap on this panel. I think we covered a lot of bases. We hope you got a lot out of it. We appreciate you coming. We have another panel at 2 on social impact filmmaking. So join us if you can, and enjoy the rest of the festival. Thank you all for all your words of wisdom.